I think it's pretty clear that inflation is, not in fact transitory as we had been promised. Every month, as new inflation numbers come out, we set a new 40-year record high. And it would be even worse, if they included house prices like they did in the 70s and 80s. But there are ways to protect yourself and your buying power. Stay tuned as we discuss how you can use real estate as a hedge against inflation. Hey everyone, it's Matt Marsh, founder of Marsh & Partners. Marsh & Partners is a development and national consulting firm that helps business owners and investors maximize their real estate and transform their businesses. For a long time, we've been told that investing in gold and precious metals was the best solution to hedging against inflation. But the problem is, the price of gold can be easily manipulated by central banks and by Wall Street. Cryptocurrencies, they've recently busted onto the scene, but there's still not a strong argument that they're positively correlated with inflation. Now there is, however, a tried and true method for hedging against inflation, and that's through real estate. In this video, we're going to focus on how you can use real estate as an inflation hedge to protect your buying power. Probably the most important aspect of real estate as a hedge against inflation is the ability to raise rents in lockstep with inflation rates or even market averages. Properties with naturally shorter term leases like apartments, smaller multifamily buildings, and even short-term rentals offer the owner flexibility to reprice rental rates more frequently than with longer term arrangements. And if you increase rents, assuming your mortgage stays the same, well, you'll put more rental income in your pocket to cover increased expenses and management costs. Even if you don't own a multifamily building or a short-term rental property, you can still capitalize on increased rents through periodic rental escalators. One of the ways you can do this is by contractually building in annual rent increases that are tied to the CPI or a predetermined set percentage. I structure all my leases this way and advise all my clients to do the same. Every year, the tenant's rent would increase based on the prevailing escalator, and the owner would be protected accordingly. That way you can make sure that even if you're not repricing the rental rate every year, you can at least keep pace with inflation. Commercial real estate leases uniquely offer an owner the opportunity to pass many of the expenses that are incurred as part of owning a property onto the tenant. In a triple net lease, the tenant would be responsible for base rent in addition to a variety of other operating expenses. Now this creates a hands-off investment, not only from a management standpoint, but protects the owner from rising expenses as well. So even during inflationary periods, when labor, utilities, and input costs increase, the property owner would not be directly exposed. Now many know about the power of leverage when it comes to real estate ownership, but fewer understand that those benefits are actually amplified during periods of high inflation. Think about it in terms of your financing rate. Let's assume you're paying a nominal rate of 5% on a note for a commercial property. Well, if inflation is 8%, what does that mean for the real rate of interest that you're actually paying? Well, if tomorrow's dollars are worth less than dollars denominated at the time you took the note out, then you're paying back the mortgage in fewer real dollars. So in other words, the real interest rate to borrow funds in this case would be negative, because the nominal rate of 5% less the inflation rate of 8% is your real interest rate of negative 3%. See how powerful holding debt can be when you're using real estate as an inflation hedge? Now, real estate holds intrinsic value because it's a scarce asset. Properties are limited to the supply of existing real estate, and new development is restricted to the amount of available land. So, as monetary inflation inevitably leads to price inflation, the value of real estate will increase. Well, it's also important to consider the price of the inputs and commodities as they relate to real estate as well. As price inflation is really felt throughout the construction and materials industries, the cost to develop a new property will subsequently increase. And that price increase typically translates to higher rental rates and ultimately higher real estate values for both new and existing properties. Now there are some simple realities during periods of high inflation that can't be avoided. More expensive consumer goods, increased interest rates, higher prices for commodities, but it's not the time to throw your hands up and simply, complain about the situation. Instead, it's important to think critically about how your assets are allocated Maybe holding large amounts of cash, long-term bonds, probably doesn't make sense. And instead, you can use real estate as an inflation hedge. Now, if you're concerned and want to talk about strategies, we might be able to help. You can check out the video description. I'm going to include some more resources down there for you. And please, if you enjoyed this video, hit the like button, subscribe to our channel, and that will keep you up to date on content that we're putting out to help you through your real estate journeys. Feel free to leave me a comment if there are any other topics you're interested in or you'd like me to cover specifically. And thanks for watching.